So if, for example, ladies and gentlemen, you go and get a situation where the carrying value of whatever is less than this TB. So you can see, ladies and gentlemen, the way this thing is coming down. It's coming down. It means that the carrying value is less. It's going upwards towards tax, meaning that you have paid more tax today. So more tax has been paid today. Higher tax has been paid today. Higher tax has been paid today. Higher tax has been paid today. And if you pay higher tax today, what does it mean in the future? In the future, what does it mean? Yeah, so in the future, I'll pay less. In the future, I'll be required to do what we call tax deduction. Tax deduction. So in the future, I'll be required to pay less because I've recovered most of it today. So it means that this automatically will lead to what we call a deferred tax what year? A deferred tax asset. A deferred tax asset, yes. A deferred tax asset. So sasa imesink kidogo ama bado nyinyi mko kwele unajuzi wangu mimi nasoma sasa nashika tumekubaliana bado ama nyinyi bado mko hapa? Tumekubaliana bado ama nyinyi bado mko hapa? Imesink kiasi. So it's very important, ladies and gentlemen, and sorry for using a bad example. This ID10T error sio example mzuri sana, ni example mbaya lakini itasaidia wanafunzi kushikanisha. Great. So, ladies and gentlemen, the most important thing is for you to appreciate here. If the carrying value is more than, let's see, is more than the tax base, you always interpret this thing from the angle of tax base. So if carrying value is more than the tax base, it means that the tax base is less. The tax base is less. It means that today I've paid little tax. So today's tax is little here. Less tax paid, and therefore, in future, if I've paid less tax today, in future, ladies and gentlemen, I'll be required here to make up. I'll be required to pay bigger taxes. And therefore, the tax base position will automatically mean that in the future, we shall be having an obligation. And therefore, this becomes what year? A deferred tax what year? Liability. So tax ikiwa kidogo. Ile tax umelipa leo ikiwa kidogo, automatically that is a deferred tax what year? Liability. Because in the future you must pay. Remember, at the end of the day, you must pay the correct tax. And that is why we are calling this thing temporary difference. We are calling it temporary difference because at the end of the day, the difference today is temporary, but in future you'll be required here to pay tax as per expectation. Ningekuwa wewe, ningekuwa nafikiria namna hii. Ukiangalia, skiza. I don't know, ama to change. Lakini hivi iko sawa. Ukiona straight away, for example, in a kind nilikuwa naambiwa high school, I wish I had a better way. High school mwalimu alikuwa anasema, atukiona nimekaa hivi atini mkono ya hinya namna hii. Ukiona nimekaa hivi, carrying value ni more. Tax base is less. And when tax base is less, I'll be required to pay more in future. So it will lead to what we call a deferred what year? A deferred tax liability. Now, ladies and gentlemen, let's revisit again what we did in our last class. Here we are. So today's session is going to be a very interesting one. Iko mwanafunzi ameniambia leo, sijawahi jua kwamba wanafunzi wanalala sana, lakini leo iko mwanafunzi ameniambia nikianza kufunza tu AFR hivi, I don't know whether it's because I'm too black, yeye analala tu. Sasa nikashindwa sasa baada ya kulala, siheri basi ya kuwa na ngoja video asubuhi. Kusema ukweli, what do you think now? Baada ya kulala. Sara akaniambia ati mwalimu, unajua naweza kosa kusikiza upeana leakage. Hata hiyo video kama kuna leakage utapata tu. Hata hakuna leakage kwa hizi vitu. Alright. Hapa si tuko hapa sababu ya knowledge. Iko mwanafunzi yako hapa sababu ya leakage. That will be very sad. Very sad. Very sad. Even sad is an understatement. Because to me, I believe I'm teaching the best accountants globally, right? I believe that I'm molding the best accountants globally. Wale ambao watakuja kusema straight away, mwalimu, you did well. Now I'm the tax accountant. I'm the tax accountant of Coca-Cola Kenya, Coca-Cola Africa, Coca-Cola Global. Si ati nilipata leakage. Hapana, hakuna leakage kwa hii maneno. Hakuna leakage kwa hii maneno. Great. Ladies and gentlemen, here we are. We shall overcome, right? We shall overcome. So here we are. Example 1, accelerated capital allowances. Accelerated capital allowances. We are told Osborne buys an asset. Before I look at our past paper question, Osborne buys an asset for $150,000 at the start of the financial year. The asset has an estimated life of 6 years and an estimated residual value of $30,000. Capital allowances are available at the rate of 25%, reducing balance, and the tax rate is 20%. So calculate the deferred tax asset stroke liability to appear in the statement of financial position for the next 3 years. But I would want us to do for the 6 years. For the 6 years. Abracadabra, this question. Is there any student who can do it from the look of this thing here? Is there somebody who has that faith that this question, if Mwalimu you give us just 10 minutes, I'll be able to do this question very easily? Is there somebody who can do this question very easily? In the past, utapenda. Kwanza kuna kitu hapo ukijua ukiangalia past paper yako, hii kitu individual company. Carrying value of an asset, tax base. Ukijua hii, kwamba all provisions have a nil tax base. All provisions have got a nil tax base. Intangibles, the same. They have a nil tax base. If you're told that employees are getting share-based payments, they have also what here, a nil tax base. This is something that will really excite you, because once you understand this, then you'll be able to do most of the questions in the past. But before we go to that, in our yesterday's class, not yesterday, but the day before yesterday, I taught you this thing. Carrying value vis-a-vis tax base of an asset. Vis-a-vis tax base of an asset. Iko mwenye anaweza ama hatuwezi? Iko mwenye anaweza ama hatuwezi? Mwalimu, surely 8 years not graduating in CPA, it's too bad. Mayoma, I feel you. We shall overcome. We shall overcome. So, Claire, I simply want you to do this question, Claire. The other part, I'll go back to the other part. I want you to do example 1. Example 1 is a very easy example. Why? Because it's all about calculating depreciation. It's all about what you guys did in CPA section 1. All right. All right. Is there anybody who has been able to see a low-hanging fruit? A low-hanging fruit. Is there anybody who has been able to see a low-hanging fruit? A low-hanging fruit. Anybody who has been able to see a low-hanging fruit? Wacha niwasaidie. Mimi hapa nimeshaona depreciation per annum. Straight line depreciation per annum. Hiyo ndio low-hanging fruit. So hapo nitamwandikia depreciation per annum. Depreciation per annum. Straight line. Depreciation per annum. Depreciation per annum equals what here? John Baraza anasema hajaona. Mimi niliona kitambo. Hii najua ni cost minus scrap divided by number of years, which are how many years? 6. So in this question, ladies and gentlemen, what is the cost? What is the cost of this asset? What is the cost of this asset? Somebody help me out. 150,000. 150,000. Thank you very much. What is the scrap value? Has the examiner given us a scrap value? Has the examiner given us a scrap value of this thing? Yes. Amesema the estimated life is 6 years and an estimated residual value of 30,000. So minus 30,000. So minus 30,000 and then everything to be divided by 6 years. Quite an easy thing. This is a low-hanging fruit. I would have harvested this yesterday, not even today. So then this will give me what figure at the end of the day? Will give me what figure at the end of the day? 20,000 per annum. Ladies and gentlemen, once I've gotten 20,000 per annum, as a good student, I know what this examiner wants me to do. As a good student, I'll come and do the schedule. So the schedule here for 6 years, we have 1, 2, 3, 4, 5, 6. So I'll come and give my examiner the carrying value. The carrying value. So carrying value as at the end of my years, what I'll have in my balance sheet. So year number 1, I'll take what minus what if you're following. What shall I do to be able to get the net book value? If you get this, I'm going to give you money. Thank you very much. So in this case here, they are telling me, Mwalimu, take the original cost of 150,000 minus 20,000 value lost, minus 20,000 value lost, minus 20,000 value lost. So then this will give me how much here, somebody? So carrying value year number 1, carrying value year number 1. Ukitaka usilale, solution ni kuongeongea. Hata kama unaongeongea uongo, hata kama unaongea uongo, so long as unaongeongea, utakuwa sawa sawa. Na ningetaka tuweke our figures in terms of thousands. So ameniambia mwalimu hapa weka 130. What will I do to be able to get the carrying value for year number 2? Somebody. Now we are not putting many zeros. For year number 2, what shall I do to be able to get this one for year number 2? Thank you very much. It's on a reducing balance basis. So it will be 130 minus the annual depreciation of 20, which gives me 110. Then could you kindly give me all the others now? You guys are bright. Give me figures to write. Year number 3, abracadabra, year number 3, year number 3, year number 3, year number 3. And today is that day to give out money. So year number 3, wamekataa kusikia, sisi figures zetu zote hapa ni $thousands. Wamekataa kusikia, figures zetu zote $thousands sasa. Figures zetu zote $thousands. Thank you very much. So please go to year number 4. Go to year number 4, abracadabra. Year number 4 is 70. Year number 5. Year number 5 is 50. How about the last one? Year number 6. Year number 6, is there somebody who is seeing something funny there? Is there somebody who is seeing something funny there? There is no, it cannot end up at 0 because remember the scrap value after 6 years is how much? Is 30. The scrap value after 6 years is 30. So it must end up at 30. That was quite a low-hanging fruit that I've been able to harvest very, very easily. Is there anybody who is able to see any other low-hanging fruit? If it's a question of deferred tax, I know for sure that the next thing will be for me to calculate tax base. The next thing will be, thank you very much. The next thing will be for me to calculate tax base. And for me to calculate tax base, I would want us to create a column here where we capture the capital allowances, capital or the tax allowances, capital or the tax allowances. So give me the capital allowances C, capital allowances, which are normally allowed by the, I was almost saying examiner, no, allowed by the tax examiner. Thank you very much, user 857. Anatuambia capital allowance using reducing balance basis. Great, great, great. Yeah. So capital allowance, ladies and gentlemen, what do we do for the first year? What do we do for the first year? Capital allowance. Are you able to see? Let me project the question. Perhaps by not projecting the question, many of us are seeing a bird with spectacles. Kangede. Right? Nyamwezi kuwa mnajua language. Your language hiyo ni Kigerman. Kigermany. Right? Capital allowances are available at the rate of 25%, reducing balance, reducing balance, reducing balance. So is there somebody who can give me the first year's capital allowance, first year's capital allowance, first year's capital? Great. Wamesema mwalimu, the first year's capital allowance is 25% of the original cost. And the original cost, ladies and gentlemen, here was 150. Was 150. Zamzam, please remember, our figures are in terms of $thousands. Zamzam, please remember, cut the 3 zeros, cut the 3 zeros, cut the 3 zeros. Right? So go to year number 2. Year number 2, Claire Kavochi. Year number 2, is there somebody who can give me the capital allowance for year number 2? Year number 2, capital allowance. So the first one, they are telling me is 37.5. Year number 2, if it's reducing balance basis, that is the best examiner ever, times 37.5. I have here 28.13 times, I have here 21.09. I have here 15.82. Is there somebody who is able to see these figures? Is there somebody who is able to see these figures, or you guys are seeing dust? Is there somebody who is able to see these figures, or you guys are seeing dust? Is there somebody who is able to do them as fast as I'm doing them? Dust, sure. Yes. Great. Thank you very much, Caroline John. Thank you very much, Caroline. First, thank you, Millie. Millie, remember, first of all, you're getting capital allowance, which now will help us, to do what you have to calculate tax base. Will help us to calculate tax base. So, sasa nisikizeni. Nikienda hapa kwa, great. Nikienda hapa kwa figure ya pili, nitachukua 25% of the reduced balance. Remember here, the original balance is 150 minus 37.5, what we lost there. So 25% is constant. 25% times into brackets, the original minus what already you have lost there. So it is 150 minus 37.5 equals times 0.25, which gives me 28.13. I want to round off to 2 decimal places. But you see, these students wameshajua siri fulani. Nao lazima na wanafunzi wangu wa kitambo wameshajua siri fulani. Mwalimu, whenever it comes to percentage, reducing balance depreciation, whenever I go to the subsequent years, I don't have to be labor. I don't have to do quite a lot. What I need to do is to come here and look at the complementary percentage, which there is 75%. I mean, you need to add 75% to this to make 100 to complete the entire percentage. So then I'll take 75% of the previous depreciation, 75% of the previous capital allowance. So 75% of 37.5, then this one here will end up giving me, if you do your mathematics very well, it will be 28.13. Hebu piga hesabu yako kidogo tuone jameni. Piga hesabu yako kidogo tuone jameni. Piga hesabu yako tuone jameni. Piga hesabu yako tuone jameni, abracadabra. Sasa 75% I maintain throughout, 75%, so nikija hapa nitasema 75% of the previous depreciation. 75% of the previous depreciation times 28.13. Can somebody give me this figure? Can somebody give me this figure? Can somebody give me this figure? So this is 21.09. Now, all of us, are we together there? All of us, are we together? Are we able now to see what Mwalimu is doing? Are we able to see what Mwalimu is doing? Martha Kuria, Rosie, great. Lucy Rotich, Caroline, Purity Chepkerui, thank you very much, Raphael, great. So ukija hapa, munasema ni 75% of the previous. As I always keep on telling you, ukitoka hapo nje after tumaliza kusoma namna hii, upatane na firstborn wako kuuliza umesoma nini, mwambie it is 75% of the previous what year depreciation. But now let me ask you a question. What if this was 10%? So if your firstborn asks you, what if this was 10%? Utamwambia kwanza toka mbele yangu hapa sababu hujaelewa. Yeah, now you make use of what year? 90%. It's good for us to clarify that, because you will get somebody who thinks now 75% is formula. It will be disastrous. Thank you very much. Thank you very much. So you guys have understood this very fast. I saw some question up there. What do? You say about 90. You say about the new. Unamwambia 45. I'm confused kabisa. Great. So hapo unakuja unasema 75 times 21.09. Unamwambia ni nimefinya nini? Times 0.75. Inakuja 15.82. Unaendelea times 0.75. Unasema hapa ni 11.86. 1 2 3 4 5. Nikija ya mwisho, ladies and gentlemen, ya mwisho ugongi na ile percentage ya 75%. Ya mwisho huwezi tumia percentage. Who can talk to me tonight? Hii ya mwisho sisi hutumia nini ya mwisho? Hii ya mwisho sisi hutumia nini ya mwisho woye? Hii ya mwisho sisi hutumia nini woye? Please talk to me very fast. Talk to me very fast. Ama ya mwisho, hii ni 1, 2, 3, 4, 5. So I know there is a sixth one which is missing. Thank you very much. This user 857 student is a good student. I even don't know why they are hiding their names. Right? Glass anasema itakuwa 150, 150, 150 minus all that you have lost here. Minus, the very best thing, ladies and gentlemen, the very best, ladies and gentlemen, thing will be, no. Listen here. I know that when I add this, I'll be able to get total depreciation. Total depreciation. And the total depreciation here is how much? It is 150 minus the scrap value. Remember, these are depreciations for each year. For each year. So whenever I add all of them, then they should be able to total up to the total value lost. Total value lost. Total value lost. Oh, somebody is telling me that this, 𝑪𝑰𝑭𝑨 is telling me that this figure is not correct. Is there a figure? And please let us not fight over rounding off errors. If you got 11.87 and I've got an 11.86, all of us are speaking the same language. All of us are children of the same mother. So which figure are you saying is wrong? Is this figure wrong, 𝑪𝑰𝑭𝑚? Is this figure wrong? No other solution. Which one, 𝑪𝑰𝑭𝑚 now? 𝑪𝑰𝑭𝑚, concentrate on this question. Wachana hizo za kitambo. Let's focus here. If these are correct, tunaachana nazo. Hiyo ingine kama tulikosea siku hiyo, bahati mbaya, wache kae huko. Acha itakuja kwa mtihani. Tu focus hapa, hii itakuja. Focus hapa. So total depreciation is 150 minus 30, which gives me 100 what here? 120. 120. 120. 𝑪𝑰𝑭𝑚, wachana hiyo story. Angalia, utakosa concept hapa. Utakosa concept hapa. So 120 minus this, minus this, minus this, minus this, minus this will give me what figure? Remember the last year, even if it's a capital allowance, the last year, you must exhaust everything. So somebody is giving me a figure of 5.58. 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 Somebody is saying that my net is low. I'm not seeing a signal. Are you guys able to see my board? It has never been low. My net is always the best. Are you able to see my board? It's low. Oh, haiko clear. Okay, I know what I shall do. You are shaking. I know. You know, this is now the real thunderstorm. This is the real thunderstorm. So nafanya nyamaze kidogo. Koja kidogo. Oh, it's saying bandwidth low. It's saying bandwidth low. Shaky. Koja kidogo. What do we do now? Do I switch off most of the gadgets which are around here? Bandwidth low. I exit and then I come back. No, you don't have that time. You don't. Please relax a little bit. Just 1 minute. Okay, so the total allowance, they are telling me something very nice here. Total allowance is 120. I don't know whether I'm a bit clear. Am I a bit clear? You know, time is a healer. Time is a healer. Are you able to hear now, Mwalimu? Are you able to hear, Mwalimu? Yes, time is a healer. Thank you very much. So I'll try to move slowly. So remember, this is the total depreciation or the total capital total value lost. It's the same. Nivumilie tu kidogo, nivumilie kidogo sababu lazima tuendelee. Uko slow motion mode. Okay. Now, ladies and gentlemen, listen and listen to me very well. Remember what we've said. In terms of value lost, here we are measuring value lost in year 1, which is 37.5. Value lost in year 2, 28.13. Value lost in the last year is always what Mr. Owino teaches you. Mr. Owino must be teaching you this thing, which he calls the balancing charge or balancing allowance. Don't you do these things, ladies and gentlemen, in taxation? Balancing charge, balancing allowance. Are they there in tax? That the last year we don't apply the percentage. They are there, yes. The last year we don't. The only thing that I've done a mistake here is calling this depreciation. I should have called it the total capital allowance. The total capital allowance. The total capital allowance. The total capital allowance. Somebody help Rael. Help me to give Rael an answer there. Total capital allowance. Total value lost. When I brought this machine brand new, it was worth 150. When it will be a scrap and we shall be selling it away, the thing will be worth 30. Therefore, between today and when we are selling it, the difference in value lost will be 120. And therefore, to get these, ladies and gentlemen, we took 120 minus this, minus this, minus this, minus. So now, are we in agreement? Are we in agreement? Are we in agreement? Are we in agreement about that? Great. Thank you so much. Now, using these, I should be able to calculate the tax base. I should be able to calculate the tax base. Who can remind us? Who can remind us? Who can? Onet means video is normal now. I'm a happy man. I'm a happy man. I'm a happy man. I'm a happy man. Okay. Okay. Where is the problem? Where is the problem? Is the problem here at 5.58? Is the problem at 5.58? Have you seen where we have gotten the total capital allowance of 120? Yes. Yes. The other way, if you want to get, in this case, this total, this balancing figure, you can also come and get this balancing figure this way. You can come and take the original value, which was 150. You subtract what you lost in year 1, 37.5. You subtract what you lost in year 2, 28.13. You subtract what you lost in year 4, 21.09. You subtract what you lost in year 5, 15.82, whatever, minus 11.86, minus the scrap value. Minus the scrap value. If you're following this approach, you take the original cost of 150 and then you subtract all the depreciations, all the capital allowances for each year. And then ultimately, as your full stop, always remember to subtract what year? The residual value. the residual value. If you do it that way, then you'll be able to get this balancing figure. Is there somebody who has been able to confirm this? Will give us 5.58? Yes. It's only Rosie who has confirmed. What about? Great, great. So now I believe, 𝑪𝑰𝑭𝑨, now we are together. Whichever method that works for you is the method I would recommend you pick. So this gives us 5.5. But the very best would have been for you as a scholar here to appreciate that these are like depreciations, meaning that the last figure will come as a result of us knowing the total capital allowance, the total capital allowance, the total depreciation. Our total depreciation, remember when we brought in this very brand new machine, it was worth 150, right? 150 minus, in this case here, the scrap value. So in this case here, the total value lost from the time this thing was brand new to the time it has become a scrap value, total value lost is 120. So 120 now minus this, I'll be able to get the 5.58 there. Now from there, come and give me the tax base. And somebody has been able to give us the tax base very well. I'm a same formula tax base, just take the initial cost minus the capital allowance. Cost minus the capital allowance. Thank you very much, Jane Rose. Jane Rose anasema mwalimu hapa, sema ni 150 minus 37.5. 150 minus 37.5. So could you kindly give me these figures very fast? Now you're the ones who are doing these figures now in slow motion. So anasema itakuwa 112.5. Now, ladies and gentlemen, after that, could you kindly guide me? What do you think will I do to be able to get the tax base for year 2? What shall I do to be able to get the tax base for year 2? What shall I do to get the tax base for year number 2? Tax base for year number 2. Tax base for year number 2. Yes, we look at the immediate predecessor. So we'll come and talk of 112.5 minus this 28.13. 28.13. So could you kindly give me an answer there? Could you kindly give me an answer there? They are telling me, Shem, it's 84.35. You guys are brilliant. You guys are brilliant. 84.35. Now, could you kindly continue and give me all the years tax basis? All the years tax basis. Wananiambia mwalimu ya tatu chukua 63.28. Please continue with that good spirit. 47.46. 47.46. We have here 35.59, 35.59, and then we have now the last one. The last one will be what here, somebody? 30 or 29 point. Most of them are saying 30. Thank you so much. Thank you so much. Ladies and gentlemen, having gotten, okay, first of all of us, have we been able to get these tax bases? All of us, have we been able to get the tax bases? There are those names that I do not get to see. Mimi nataka nikuambie siri moja. Nimefunza na hii Zoom for long. I'm telling you. Wale wanafunzi ambao wanapenda kuongeongea kwa Zoom, how Peter. Me, I would want to bless you. I would want to speak a blessing to all of us. And the only way, of course, I'm not a priest, right? The blessing which I would want to speak to you ni kupatia siri ya hii Zoom. Wewe andika, hata kama unaongea uongo. So long as unaongea, utapita, utashangaa sana. Just be active. It's the best way of focusing. Now, ladies and gentlemen, having gotten the tax base, then what do you think shall we do for us to be able to get our temporary differences? What shall we do for us to be able to get our temporary differences? Yes. Yes. What shall we do? So we have here the tax base. We have here the tax base. So mimi narudia yangu tu. Unaweza utapata mwanafunzi ako na usingizi, anashtukia mimi naandika, anafungua macho, anaanza kukopi yake tu. Just bring mine here. 63. Hapana cheza na usingizi. Usingizi ni kitu tamu sana, but you see, we must know how to fight it. You must know how to fight it. So now we are getting temporary differences. Thank you very much. So these temporary differences, the temporary differences wameniambia mwalimu chukua carrying amount ama carrying value minus TB. So carrying value minus tax base. Thank you very much, Joaquim. So unakuja unachukua hapa 130 minus this. Please give me a figure. Please give me a figure. So ananiambia mwalimu ni 17.5. 17.5. Aha, next one inakuja ngapi? Next one inakuja ngapi? 25. 25.65. Thank you very much. You guys are brilliant. And then the next one is gentlemen inakuja ngapi? Aha. Claire Kavochi. And I think I know Claire. I don't know kama ni yeye. Lakini jina ni very unique. Lazima namjua sana Claire huyu. Aya, Ishana niambia 26.7. Hii nimeshaandika. Asante sana. Anyaki pia ameconfirm. Ila 26.72. Tuko na Mary Kimani. Mary Kimani pia namjua sana 22.53. 22.53. Alafu tuko na 22.54. One and the same. We'll not fight about that. We'll not fight about that. TD stands for what? A temporary difference. Temporary difference. Mary Kimani amesema ni 14.29. Zimeweza kuwa tofauti sana. Is it 14.29 ama 14.41? Aha, 14.41. 14.41. 14.41. 14.41. And then the very last one, ladies and gentlemen, becomes what here? Becomes 0. Now, ladies and gentlemen, I would want someone to talk to me tonight. Or rather, let's just go ahead and get the deferred taxes. Do we have the tax rate? 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 Wanasema tax rate ni 25%. Tax rate is 25%. So if you multiply this with 25%, 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 you'll be able to get what we call deferred tax. You'll be able to get what we call deferred what here? Deferred taxation. Wamekataa sio 25%. Na napinga sasa. Sisi tuko na msemo ukweli hapa. Mbona sasa nyinyi mnapinga na sisi ndio tuko na msemo ukweli? Sisi ndio tunasema ukweli. Sio nyinyi mnasema ukweli. It's 20%. The 25% was the capital allowance. You guys have misled me, but I forgive you. In effect, we're 20% your tax rate. 20% your tax rate. 20% your tax rate. 20% your tax rate. All right? So please kujeni hapa muniambie inakuja namna gani? Inakujaje woye? Inakujaje? Ruth anasema 3.5. 3.5. Thank you very much, Jenny Rose. Ayo next nakuja nga Felista. 5.13 Anyaki. Mesha Kimitei 5.13. Zamzam 5.34. The next one is 5.34. Thank you very much. 5.34. Thank you very much. The next one takuja ngapi? Somebody 4.51. 4.51. 4.51. 4.51. 4.51. Jabir 2.88 ama 2.9. 2.88 ama 2.9. Thank you so much. The last one inakuja ngapi? The last one inakuja 0. Thank you very much, ladies and gentlemen. Is there somebody in this case here who can talk to me tonight? The deferred taxes that we have there, are they DTAs or DTLs? If you don't understand the language, say none of the above. How we get a temporary difference. To get temporary difference, we are taking, in this case here, carrying value, the carrying value here, or carrying amount minus tax base. Minus tax base. I can see so many students who are talking, are they DTAs or DTLs? Anyaki is saying DTA. Anyaki is going against the grain. and they're saying it's DTA. Could you kindly convince us why are you calling them DTAs? Why are we calling them DTAs? You know, there is a rule. There is a rule. There is a rule that must be followed. There is a rule. Carrying value is more than the tax base. If the carrying value is more than the tax base, if the carrying value is more than, if the carrying value iko na hinya, the Kikuyu community understands that very well, hiyo kitu ya hinya. Lakini sio wote, pia mimi najua kuna vijana wengi sana hapa hawajui Kikuyu, lakini kama hii carrying value ndio iko na hinya, straight away unajua hii kitu ni deferred tax what year liability. Like in this case, of course, you can compare the two very well. You can see like in year 1, carrying value is more than. Carrying value is more than. Thank you very much, Steven Onyango. Steven Onyango amesema hata kama mwalimu unataka kuongea lugha yetu, hata uongea Kikuyu, sisi tunajua lugha yetu. Na lugha yetu ni Kizungu. Deferred tax liability. The same case here, ladies and gentlemen. These are deferred tax what year? Deferred tax, even this one is a deferred tax liability. This one here is higher than this. So deferred tax liability. The same case here, this one is more than this. Deferred tax liability, more than this. How about the 6th year? Olivia anauliza swali mzuri sana. Mwalimu, can we add all the, for example, like the temporary differences, all of them, and then we multiply with 20%? That is only applicable if, for example, these were assets. Like, for example, we have a 2020. Then in 2020, you have asset A, asset B, asset C, asset D, asset E. Then in that case, you can combine everything together. And then say in 2020, our total temporary differences of our all assets was 10,000. And then I'll be able to apply the annual tax rate. But you see now what you're telling me to do to come under, you know, these are years. So then how will you report, for example, about deferred tax for year number 1? It will not be possible. If these are years, ladies and gentlemen, always calculate the deferred tax liabilities and or assets kando kando namna hiyo. Because like now in year 1, this is what I'll take in the statement of financial what year position. Very good. So Sam is coming up with a very good concept. Is it appropriate if you say that whenever you get temporary difference being positive, can we say in this case here that then you have a deferred tax what year? You have a deferred tax liability, right? Yes. Huyu anauliza mambo ya tax. Hii ndio taxation namna hiyo. Hiyo ndio taxation nimepatiwa hapa. The tax rate is 20%. Ladies and gentlemen, I know you would want us to stay there forever. I'll not even do the income to take the income statements. Of course, those of you understand in this case here, like the income statements, you can easily go for a shortcut. Like now for the first year, of course, I'm starting from 0. I'm going to the closing balance of 3.5. So I can see an increase in the deferred tax account. If it's an increase in the deferred tax account, then straight away, you know it's an expense, right? But I don't want to go to that way. So long as umefika kama hapa, uko sawa sawa. So please allow mwalimu, in this case here, to take you to something a little bit different. How do we apply this deferred tax thing in share-based payments? Share-based payments. Nyinyi mnajua kufanya hesabu ya share-based payment kwanza. Tuulize kwanza kutoka hapo. Nyinyi mnajua kufanya hesabu ya share-based payment, general one. Ile unavalishwa vested. Ile unavalishwa vest. Ile ambayo unavalishwa vest. Amjajibu mimi kama mnajua kufanya kitu. Mimi napenda sana kuchukua my feedback like that. Unaambua some employees left in this year, 3 of them, right? Can try. Thank you very much, Steven Onyango. Can try. Rebecca amesema yes. Hiyo Sarona amesema yes. Liwe liwalo mwalimu hiyo hata usifunze at all. Hiyo can try. Asante sana. Niko na hint at least. User amesema yes. Have an idea. Thank you so much. Have an idea. Thank you so much. JD, sasa ulikuwa wapi mwalimu akifunza? Ama we shall overcome. Ama we shall overcome. Ama we shall overcome. Refresh kidogo no worries. No worries. Sasa hapa umetupatia concept rahisi sana. Unasema Brown has granted 1,000 equity settled share-based payment scheme to each of its 100 employees. The vesting period is 4 years and no employees are expected to leave over this period. The fair value of the option at the grant date was $2 and its intrinsic value at the end of the first year was $1.6. So they want us to calculate the deferred tax balance to appear in the statement of financial position at the end of the first year in relation to the share-based payment scheme. Aya. Hebu nipatie dakika moja kwanza, unipatie carrying value. Nipatieni carrying value in this particular case. Nipatieni carrying value in this particular case. Carrying value of the share-based payment. Abracadabra, hawataki kuniongelesha. Abracadabra. Abracadabra, hawataki kuniongelesha. Abracadabra. Akiuia wataka kuniongelesha na walikuwa wameniambia wanajua sana kufanya maneno. Sasa tena hawazungumuzi at all. Sasa inakuwa international disaster. Inakuwa ni abracadabra. Great. I can see so many answers being given to me. So many of them. Aisha anasema 200,000. Harriet 200,000. Rebecca 50,000. Thank you very much. You guys are geniuses. Joy is saying, do an example. I'm not going to do an example because I'm not going to sit for an exam. To tell you the truth, ile siku mnaanza exam tarehe 4, mtaona tu picha kwa Facebook. Nitakuwa mbali. We shall overcome. We shall overcome. Aya. Sasa, wacha sisi turudi hapa. Hili swali rahisi sana. Wanasema, Brown has granted a 1,000 equity settled share-based payment scheme to each of its 100 employees. The vesting period is for 4 years and no employees are expected to leave over this period. The fair value of the option at the grant date was 2 and its intrinsic value at the end of the first year was 1.6. Ladies and gentlemen, remember what Mr. Norbert told you here. I told you something very easy. He told you something very easy. He told you that for you to be able to get the share-based payment, that you shall be able to take to your balance sheet. So we have 1,000 share-based talk of like shares. How many employees? So we have 1,000. Just a moment. So we have 1,000 times 100 employees. So Brown has granted 1,000 equity share-based payment to each of its 100 employees, right? And in this case here, we can see the truthful value is supposed to be 1.6. Remember, you must have been told that whenever you see fair value vis-a-vis intrinsic value, always make use of the intrinsic value. Is that not the case? Is that not so? Whenever you're given fair value and intrinsic value, according to IFRS, intrinsic value takes precedence. Is that not true? Akiwoye. Niongelesheni tu. Yeah. Yes, intrinsic value, always. If you did with Mwalimu this, we use fair value, no intrinsic value. Intrinsic value normally carries the day. And then, ladies and gentlemen, now, could you kindly give me this figure first of all? Kindly give me this figure first of all. We use the original value. We kwanza nipatie figure, wacha siasa kwanza. Nipatie figure kwanza. Wanasema ni 160,000. But now remember that this is a figure, it's a share-based payment value for how many years? For 4 years. And as we are interested in an annual figure, all right? So in that case here, then the carrying value of my share-based, the carrying value of my share-based payment, is this divided by 4, which gives me how much here, somebody? 40,000. And remember, this 40,000 has to be put in brackets. It has to be put in brackets. Ukweli ama uongo? Ukweli ama uongo? It's a payment anyway. So it has to be captured in a bracket like that. Ladies and gentlemen, from there we have the tax base. So what is the tax base of a share-based payment? What is the tax base of share-based payment? Yeah, nil. Could you kindly give us a reason why it is nil? Could you kindly give us a reason why it is normally always 0? Kindly give me the reason. Why is it always nil? I'm now starting getting some good reasons. Juliana nasema shares issued. Please talk to me. Why is the tax base of share-based payment 0? If you don't give me a very good reason, I'll advise you guys to start sleeping for very few hours. Because of permanent difference? No. These has a temporary difference. Non-cash payments, okay. Provision is given 2 to 1 point. We don't tax employee benefits. Pre-taxed liability as a result. No. Wacha kwanza napatia dakika moja mpaka mpate the better option, the better explanation. Now, bara tusumbuke mawazo sana, sisi to cram for now. When you guys will come over to ISPAC, when you become members of ISPAC, of course, I'll be among those guys here will be doing what we call continuous professional development for you people, because after CPK, you'll still continue learning. Every year, you must give us at least 40 CPD hours. So that time, you'll be able to get further understanding of this. But for now, just cram that the share-based payment tax base is always nil, is always zero. Cram. Now, if that is the case, ladies and gentlemen, could you kindly go ahead and give me, the temporary difference? Please give me the temporary difference. Kindly give me the temporary difference. You have an idea? Yes. Give me the temporary difference. Temporary difference. I'm being told it's minus what year? 40,000. So please give me the deferred tax asset or liability. Deferred tax asset or liability. Have you used Nadia? Have you thought through this thing? Or you just saw a negative and then it's a deferred tax what year? Asset. It's a deferred tax asset. Why? Because the carrying value is less than what year, somebody? The tax base. The carrying value, which is negative, is less than the tax base. And of course, in this case here, the deferred tax, what is the percentage? Have they given us the percentage rate? Wamesema percentage rate, there is nothing really. Percentage rate. Perhaps in this case here, this is chapter number 20. Chapter number 20. Na mimi nimewafanya sana nyinyi wanafunzi wangu. Mna save pesa mingi sana. Kama si class, I'm so sure somebody angekuwa maybe out kidogo. Lakini class sasa inawakalia. So mna save pesa kweli, inafaa mnashukuru sana, isn't it? Who knew that you guys could be reading on a Friday at this time of 100 students? Kasneb kweli ni Kasneb. Who knew? Great. Yuko mimi naliambia Kasneb mwalimu anatupiga character development. No, hiki mtapita haraka sana. Kuna areas tukiguza, ubaya sana vile nyinyi mpate time ya kurevise. Kuna areas tukiguza kama hii tu mchezo tu hivi. Alafu nifanya past paper question moja. Kuisha. They assume the 20%, but you can see how they have done it, and they're insisting yet that you guys have to use intrinsic. You must use intrinsic, etc. Ladies and gentlemen, there are things that I would want. I hope you guys have been able to see the solution here, right? And they're telling you it's a deferred tax what year? Asset. The only thing that they never gave us in the question was this percentage 20, but of course with 20%, you'll be able to get this deferred tax asset very easily. Very easily. You see, like last semester, they gave us this concept of a hedge accounting. Wakasumbua wanafunzi sana. Wanatoa maswali ya ACCA, imagine hawa jamaa. Oh yeah. We shall overcome. Great. 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 So the thing that I would want to sell to you here today, which I would want us really to appreciate, is this. As I go now to my past papers, humble me. Being here, bundles imeshinda your white cap, okay. What do you mean? Do you spend more than 200 bob for bundles? Now listen, anytime we see property, plant, and equipment, this is the biggest thing that you're supposed to know. Anytime you see property, plant, and equipment, where they want you to calculate a deferred tax, you shall be getting the carrying value being equal to, of course, the cost minus accumulated depreciation. And then you must give us what we call the tax base. And you can see this examiner is underscoring here that this one has to be tax written down value. Tax written down value. Listen, any provisions will always have what? A nil tax base. Any provisions will always have a nil tax base. Intangibles will always have a nil tax base. Share-based payments will always have what here? A nil tax base. So how many items in this case, ladies and gentlemen, if you have understood this schedule of mine, how many things will you never forget which have a nil tax base? How many things will you never forget which have a nil tax base? 3. Can you name them? Can you name them very fast? Can you name them? Provisions, share-based payments, and intangibles. So when we meet in our tomorrow's class, I'll be able now to do a comprehensive question. You've told me to do which question from your past paper? There's a question you've told me to do from your, which is comprehensive, which captures all these things you've learned here today. I've stayed in this deferred tax because I know it will be there in your exam. Deferred tax out of miss and deferred tax. And ni savior. So Joachim anasema all of us, we try November 2018. November 2018, and then we post the answer where? On WhatsApp. Otherwise, it has been a pleasure hosting you for tonight. Bye-bye. Be blessed. See you tomorrow. Tomorrow, remember, early morning, we have a class at 5 a.m. Which subject? Advanced Financial Management. AFM at 5 a.m. Please make sure you sleep for 5 hours. That's why you can see I'm also fighting to sleep for those 5 hours. Bye-bye. See you. Yes, Martha, for AFR, I would want us to be having like a class every day, just 1 hour every day, a class like every day.